Hello traders, choosing a strike price can be one of the most critical steps when it comes to trading options. It's a balance between probability, cost, and risk. I'm going to walk you through three powerful tools within the TD Active Trading platform: the charts, the options chain, and the risk profile tool to help you select your strike prices with more confidence. Let's get started. We begin with the charts, where we'll be using technical analysis to help us identify key levels and gauge the prevailing trend to help us determine where the stock price is likely going to move. Now, starting with the trend, we're looking to see if the overall price is in an uptrend, downtrend, or if it's just range bound. In this case, we can see we are in an uptrend. This is marked by this bullish price channel, the telltale being higher highs and also higher lows. But we also have a healthy short-term pullback or correction as part of this overall bullish price structure. Next, we want to be able to identify the key price levels. Now, if you're bullish, you're going to look for strong areas of support or demand zones, which you can see are marked by these green horizontal lines. Conversely, if you're bearish, you want to look for areas of resistance or supply zones, which is marked by this red horizontal line here that we have. You can consider this as a base to helping select your strike prices. So for example, if you think the stock price is going to stay above this $205 level, you might look for a strike price either right there at that price or slightly below that support level that we have over here. Now that you have a price zone, let's talk about probability. Next, we're going to head into the options chain. Here you'll find one of the most common Greeks that's used by traders, and that is known as delta. So delta does a couple of things. First, it shows you how much the price of an option will move for every $1 move on the underlying or the stock, in this case that we're looking at. But here's where it really matters for those that are picking your strike. Delta also acts as a proxy of the probability of an option expiring in the money. So for example, this 195 strike that we have here represents an 87% chance that this will expire in the money. Conversely, if we look at the $205 strike call, this has a delta of 59 or 0.59, and that means there's a 59% chance that this strike price will expire in the money. Now, if you want to better your odds for a long trade with a higher probability, you can consider a strike price with a higher delta. But keep in mind, the trade-off is it is going to cost you. And if you're looking for more leverage with a bigger anticipated move, you may consider going out of the money with a lower delta option, but also remember, it does present lower odds on the probability of it being in the money. Finally, once you have a trade in mind after completing these steps, you can right-click on the option and select Analyze. In this case, we're going to be bullish and go with the 205 strike call price. So I'm going to right-click there, click on our Analyze, and since we're going long, we're going to select the buy over here. By selecting this, this is going to bring your planned trade to our risk profile tool. What this does is it gives you what-if scenarios to consider. It lets you confirm the math and also view the profit and loss levels based on the underlying movement for both the current day that we have in this orange line, as well as our chosen expiration date that we've got here. You can also add vertical lines, or what we call price slices, to the chart to show exactly where your break-even is, as you can see over here, as well as where you'd hit your maximum profit or maximum loss if it applies to your trade. As you can see in this case, this is where we'd start hitting our maximum loss. It just helps make things clearer. Now, as you move along this x-axis price scale, what this does is it will adjust accordingly or recalculate what your gain and loss would be. So as you can see in the case of a call, if the stock price tends to go higher, in the upper left corner you can see the values, the gain being adjusted as we move higher with the stock price. Now, as we hit past our break even here, you can see now we're making positive gains over here. So this should give you an idea of the risk and reward profile of the trade. And there you have it. Combining these three steps: technical analysis for price targets and trends, delta for probability of in-moneyness, and the risk profile for expected gain loss, can help take the guesswork out of your next move. Happy trading, everyone.